Well, as we commence trading on Christmas Eve, we once again have positive news from international markets, and it looks like Santa Claus will take us all the way through to Christmas with another rally overnight in the US. The S&P 500 up by almost 0.5%, the NASDAQ up by a little bit more than that. I'm recalling yesterday too, here in Australia, we're up by 1.1%. We're up 2.5% for the week already. So we're seeing some very positive momentum in markets. Europe was a little more sanguine, with the UK finishing just in the green, France flat, but Germany and Italy also making gains. And it does look like the seasonal goodwill and the prospect of lower US rates is boosting share markets around the globe. In the US, it was back to the Magnificent Seven. 6 of the 7 rose in trading, and part of the rise had to do with news that tariffs on China chip imports and China chip makers would be delayed. And of course, that easing of restrictions around chip trade between the US and China is a positive for the globe and a big positive for those companies directly exposed. Nvidia, the second best performer in the S&P 500 last night, up by a bit more than 3%. Broadcom was up 2.3%. Amazon up 1.6%. And general support for tech stocks on the back of those easing concerns around chips made a difference. We did get some macro data last night. US GDP came in for the quarter. Now, this has been much delayed data, and so it's even further in the rearview mirror than normally we get with GDP data. But nonetheless, in the third quarter, the US economy expanded at a rate much larger than analysts expected at 4.3%, well above estimates that were below 4%. So that expansion was definitely good news for the US economy. Now, in the past, we've seen markets react poorly to that sort of strength in the economy as they take the potential for interest rate cuts off the table. But last night, good news was good news, and the share market rallied after that data release showed such a strong expansion. In Australia, we'll close early today at 2 o'clock East Coast time. We'll see trading cease here in Australia, and there'll be shortened trading periods in Hong Kong and in the US tonight. So something to be aware of if you're trading actively during these sessions. They will all end early today. And of course, here in Australia and in Hong Kong, we'll have holidays tomorrow and Friday and resume trading next Monday. In the US, they'll resume trading on Friday night on Boxing Day there. So something to be aware of over the coming period. We'll also see a similar break next week on New Year's Eve with an early close to trading and a holiday from trading on New Year's Day. One of the features this year has been the outperformance of the Hong Kong market over the course of the year. Now, here in Australia, year to date, the ASX 200, after a fairly volatile year, is up 8%. The S&P 500 had an even more volatile year with that big sell down in April, and yet has managed to put together a 17% gain for the year so far. However, both of those pale in comparison to the Hang Seng, which is up 29% for the year so far. And that outperformance is remarkable and has potential to keep going because the driver here is valuation. We have recently seen over the last month or so a rotation out of those high growth US names into European and Hong Kong stocks that have similar growth profiles. And of course, Hong Kong has a very strong tech listing. The reason for this shift, as I say, has to do with valuation. And while there are many different ways we can look at valuation, a rough rule of thumb for markets is the price to earnings ratio for the next year. And the 1 year PE for the S&P 500 is about 25 times next year's earnings. The PE for the NASDAQ 100 is around 36 times next year's earnings. In Hong Kong, that same ratio is 12.5 times next year's earnings. And that's how much cheaper the Hong Kong market is still trading despite that stonking outperformance over the course of 2025. So we think the prospects for Hong Kong remain positive. And despite its outperformance, it's poised to once again deliver outperformance in 2026 based on that valuation argument. It was the best year in Hong Kong in 5 years. Sectors that really performed include gold, health, finance, cars, and artificial intelligence, in that order broadly. Clearly, potential for lower US rates is feeding into global markets and it's feeding into Hong Kong as well. But they also have the extra kicker of China policy, which has been demonstrated once again to be supportive broadly in terms of the Chinese economy and therefore the Hong Kong market with its direct exposures. We're also seeing evidence investors are turning this way. And whether we look at the flow of money from mainland China to Hong Kong or whether we're looking at ETFs, inflows this year have hit record levels for Hong Kong. We're seeing some strong stock performances on the back of it. Now, PopMart, and I won't pretend that I understand why this business is so popular with its Labubu dolls, but nonetheless, the revenue suggests they remain very, very popular, and so does the share price. PopMart up 126% this year. Gold miners Zijin up 156% this year, and retail giant Alibaba up 83%. Now, these are very strong performances, and they compare with anything listed anywhere in the globe, including the US. And as I say, the valuation argument for Hong Kong stocks remains in place. A number of analysts are looking for very strong gains over 2026 on the Moomoo platform. You'll see that the Hang Seng is forecast to rise between 15 and 20%, depending on which analyst we look at, meaning that the current levels just below 26,000, we might see 30,000 for the Hang Seng index at some stage over the course of 2026. So turning to our watch list today, first up, we've got SMIC. This is the Hong Kong chip maker. Current market cap in Hong Kong dollars is about $550 billion. So a very substantial company. It's up more than 100%. It's more than doubled in 2025. It does benefit from the 18-month US tariff delay. The analysts on the Moomoo platform community have a strong buy on SMIC. And so it has many challenges, but the big challenge for many chip makers is closing the gap with the market leaders like NVIDIA and TSMC. And if it can make the technology leap required to close that gap, the potential here is very real. Second on our list today, Rocket Lab. Now, Rocket Lab, very interesting business. They provide support services for launch into space. They're up 90% over the last month. And they have a $816 million contract with the US Space Agency. So far this year, they're up 200%, having launched 21 times over the course of this year, and are beneficiaries of a new US presidential order put out last night mandating space travel. Analysts have lifted their targets. It has ripped high. It touched an all-time high of $79 or above $79 a share just a day ago. It's currently trading around $77. Analysts, in some cases, revising their targets upwards from $70 to $90 to reflect that huge leap in the share price. It does look a little vertical at the moment, but there are a lot of exciting prospects within this business. And last on our watch list today, Elsight. This is a local Australian listing, ASX listing. Its main business is around drone and UAV connectivity, and it provides communication out of line of sight to those sorts of vehicles. It's up 3.6% yesterday and up 100% over the course of the month. Clearly, there's a focus on the defence sectors at the moment, globally and locally. And Austel and DroneShield have been major beneficiaries. Elsight seems to be joining that club because it's up 740% for the year. Current market cap now around $700 million. Over the course of this year, it has increased revenue by 10 times. And that's the sort of growth they're seeing in their business. At the moment, analysts have a strong buy-in with a target at $3.60, up about 13.5%. Well, that's our watch list for today. And this is also our last presentation for the year. Thank you for joining us for the daily. We look forward to catching up again when we return in 2026 on Monday, January the 5th.